Jay Powell and the Fed is going to be in focus this week in more than one way. And now that we no longer have to worry about a recession, as Bank of America says, will the stock market continue to rally to new all-time highs? This week is going to be very important for stocks. Are we going to continue to see the dollar on the move back down? On Friday, the dollar was down roughly 63 cents, which actually helped propel gold to make a new all-time high. Now, when we take a closer look at gold, it just barely closed above all-time highs. So where is gold likely headed? We've been talking about this over the last several videos, and the ABC completion will bring gold up to about 25.86. If everything is good out there in the economy and the stock market, why is the fear and greed index sitting at 35? We are still in fear territory. Is the worst behind us? When we come over and look at the S&P 500, out of the last 10 days, only one of these days have truly been a down day. Yes, I would agree that on this day, we closed lower than where we opened, but we still closed higher than the prior day. And if we count out the candles, 1, 2, 3, 4, 5, 6, 7, we're on day number 7, where all the market does is continue to rally up. Is that about to come to an end this week? As Bank of America says, they are no longer predicting a recession. That's at least what the CEO is saying. However, the problem that I still have with that is going to be the yield curve. It has been inverted. Now about 2 weeks ago, we were getting very close to being uninverted. Now, when the yield curve uninverts, that's when bad things are normally going to happen in the stock market. For instance, look at this graph right here. Every time the Fed goes on an aggressive rate cutting campaign, it has always ended poorly for the stock market. Look how much the stock market has pulled back every time the Fed has went on an aggressive rate cutting campaign. And speaking of the Fed, we only have 31 days until the next FOMC meeting. Then as we come over and look at the probabilities of rate cuts, you can see the market is pricing in aggressive rate cuts. Now, why is this important? Because we come over and look at the yield curve being inverted. How is this going to be able to uninvert? It's going to be very simple. When the Fed starts cutting rates, that is when the yield curve is probably going to start to come uninverted. That's when the stock market could also be under more pressure. And let's not forget, it was roughly a week or two ago when the SOM recession indicator basically triggered off, and when this occurs, we are normally already in a recession, or a recession is just a few months away. Now, this week is going to be important because Fed's Powell will set the stage for the first rate cut in years at Jackson Hole. So how's the overall market going to handle this? Are we going to see the dollar index coming even lower than what we've been at, which would actually push gold running up to new all-time highs? And are we going to see the TLT or the bonds go rocketing up even higher? And is that going to put pressure on the yield curve finally becoming uninverted? Now, when we come over and look at the Dow theory sell signal, we have the transportation index in the bottom, and we can see it's still unable to make a new high. The Dow trend line is still intact, and we're going to see, will the transportation index finally come back up? If we look up here in the top pan, we can see the Dow is not that far away from all-time highs. Now, when we come over and we look at the SPY versus HYG, I want you guys to pay attention to us. The SPY has not came and regained all-time highs, but if we look at the HYG, over the last year or so, the HYG is now at the highest level that it's been. Is that going to be a good sign for equities? Are we going to basically have no pullback in the market? And if you weren't down here near the lows, you either got to jump in at higher prices, hold your nose and wish for the best, or you're simply going to miss out on the move. Now, we come over and look at Chipotle. Is it time to buy Chipotle? And when we come over and we look at a chart of Chipotle real quick, what do we see? Well, we kind of have a triple bottom-ish pattern. We had the first low come in and get set. We overthrew it with a gap lower, coming back and basically filling the gap. We came back up, boom, we came down to test that level once again. So is this enough? And I'm going to warn you guys on something really quick. If this turns into a lower level consolidation, aka the MACD gets towards the zero line and we're still near these lower levels, watch out, we could see substantially lower prices moving forward. We come over and look at Nvidia, the king of AI, and we see Nvidia has had a strong rebound as well. And let's not forget, Nvidia has a gap right above us at about 126.27. Now, when we look at the most recent investor sentiment survey, we saw the bears dropped off after they really increased the prior reading, and also the bulls also jumped up roughly 2 percentage points. So is this still going to be good for stocks, or are investors going to be proceeding with caution? As we come over and look at the economic calendar this week, one thing you'll notice is we have a lot of FOMC members speaking. For instance, on Monday at 9:15 a.m., Fed member Waller will be speaking. On Tuesday, we have Bostic and Barr speaking as well. Then on Wednesday, we have the FOMC meeting minutes. So we had the Fed in focus by looking at the FOMC meeting minutes, but then Then Thursday, what do we have on deck? We have the weekly unemployment claims. We have flash manufacturing PMI. We have flash services PMI. We have existing home sales at 10 a.m. But let's not forget Jackson Hole. This is going to be day number 1 of Jackson Hole. And we're going to see, is Jay Powell going to derail this rally, or is Jay Powell about to pour some fuel in the fire? And we're going to see the market rocketing even higher from here. Then on Friday, Fed Chair Powell is going to be speaking. We also have new home sales. And let's not forget, it'll be day 2 of Jackson Hole as well. Now, as we come over and look at the diamonds, we see diamonds have also had a very strong rally on the way up. And you can see right now, we're just above the 78.6. Now, if we don't start coming down early this week, we're probably going to make it all the way back up towards all-time highs. However, look at the MACD indicator, just crossed to the upside. So if we simply run right up there right now, ringing the bell for new all-time highs, that's more likely than not going to set up a MACD divergence play. Then as we look at the small caps, last week only able to fill one of the gaps. Then as we come over and look at the small caps, last week it was only able to fill one of the gaps from the 2 gaps from the prior week. And as we look at this, keep in mind the MACD indicator is not cross bullish yet. Will we get more bullish momentum up? Keep in mind we're about the 50% retracement of that move that we had down in the market, and we'll see, can we make it all the way up here, potentially fill in the gap? And we got to be on the lookout. Are we about to produce a higher low this week, or will we see the market starting to come all the way back down with a double bottom, or potentially make it a new lower low? I want to make everybody aware Apex 7 71% sale off all their evaluation accounts, 50% off reset fees, get funded in as little as 1 day, and $40 activation fees on the larger account sizes. And if you guys would like to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, as we come over and look at the SPY on the weekly chart, notice the last 2 weeks have been very, very bullish candles on the way up. MACD indicator is still crossed to the downside on the weekly chart. And on the daily chart, people are asking, are we overbought? Does the market have to correct? Well, if we come over and look at where the moving averages are, we can see the 20 period is below the 50. We can see that both of the moving averages are still above the 200 period moving average. And we do have a high volume node right below us at about 544.82. Then if we come over and look at the RSI indicator, notice the RSI is not in overbought territory yet. So if you think the market has gone way too far too fast, the RSI just simply is not confirming that thesis at this moment. But then when we come over and we look at the stochastics, notice that stochastics is above 80. However, we can stay above 80 for quite some time. And really where this signal would come into play is if the stochastics can start getting back below the 80 level, then just then maybe we start to get a bit of a retracement on the way back down. We come over here and look at the 4-hour chart. Notice the MACD indicator has a very good separation. It is not showing any signs of weakening at this moment. However, on the 4-hour chart though, we can see the RSI is getting very close to being to the overbought territory. Then when we look at the stochastics, we can see it is extremely overbought at this moment. Has a reading of 98. Now, doesn't mean it has to pull back imminently, but if you're thinking about jumping on the long side, think about this for a minute. Do you want to be buying at the top of a range, or do you think it's better to buy near the bottom end of the range? Now, as we look out here on the 30-minute chart, MACD indicator has already been rolled to the downside, and the RSI has just came right back down below the 70 level after being in overbought territory. So now what do we expect when we look at the volume profile? A couple areas I want to focus on is we do have a minus development area, which is right near the low of the last 30-minute candle at 553.53. That could be an area if we come down to, we reject and come back up. If we can clear that area, then I'd be looking for value area low, then the lows from Friday, and then all the way down here towards gap support at about 548.89, then maybe a multiple day move all the way down towards filling the gap at about 543.72. When we come over and look at the futures markets, notice we still have 2 untested point of controls when we're dealing with the weekly volume profile levels along with the composite profile levels. Now, those 2 untested point of controls above us, the first one comes in at 5610.75. The second one is all the way up here at 5648.50. Another key area that we want to focus on this week is also going to be this minus development area, which also correlates with the minus development area on the daily profiles as well, which we'll talk about here in a few moments. Now, if we look at the weekly volume profile levels, we have value area high coming at 5586.25. We have the point of control coming in at 5566.00. Value area low all the way down here at 5444.00. Now, if indeed we start breaking above value area high this week and we start coming back down, I will want to look to target that point of control. I will want to look to target this minus development area along with value area low. But when we come over and we look at the daily chart, I already have the minus development area drawn out, and that minus development area is going to be anywhere from about 54.92 all the way up here to about 55.04. So if we start to see the markets weakening substantially, that is going to be one area I want to play off of. Also notice we kind of have a double top-ish pattern up here after already being at elevated levels. Now, when we look at the daily volume profile levels, value area high will come in at 55.83.25. The point of control is going to come in at about 55.77.25. Value area low is going to be 55.60.75. Now, one thing I want to remind you guys is we still have ceasefire talks going on in the Middle East. Iran still has not went on the offensive, and maybe they won't. Maybe the ceasefire talks will give Iran a way to back down so that the tensions in the Middle East can kind of de-escalate a little bit. If Iran goes on the offensive, we're probably going to see a sharp decline in the market. So we'll have to keep an eye on that news as we move forward. But let's say Sunday night, we gap up above value area high, be on the lookout. If we start coming back below it, I then want to play all the volume profile levels to the downside, and my runner target is going to be the minus development area, then maybe even hold out for another move all the way down towards 54.67.75. If we break above value area high and we're staying above it, that's when we want to focus on these two untested point of controls above us out here on the weekly profiles. Now, as we come over and look at the QQQs real quick on the weekly chart, we can see we've had back-to-back very, very bullish weeks in the market. Then out here on the daily, we've had a very strong push on the way back up. Now, on the move back up, we're actually sitting just slightly above the 61.8 level, and we do have another high volume area on the composite profile right up here about 480.85. Then as we come over and look at the moving averages, we can see the 20 is below the 50, but both of the moving averages are still above the 200 period moving average. Now we come over and look at RSI, we can see the RSI indicator is sitting at about 56. So from an RSI standpoint, I can't say the market is overbought. Now when we look at stochastics is above the 80% level, and we're going to see, does the stochastics start to roll back down below that level? If so, then we can start to see maybe some of these gaps from last week coming back and potentially being filled. We see out here on the 4-hour chart, MACD indicator is still extremely strong. We saw the RSI almost get to the overbought level. Then on the 1-hour chart, RSI has been above the overbought level, and we do have a cross below the signal line. We'll see if we can start getting back below 70. If so, then maybe we can start to work on filling some of these gaps that we left behind from last week. Now, as we come over and look at the 30-minute chart, MACD indicator is already crossed to the downside. However, if we stay up here at these elevated levels and the MACD indicator gets down towards the zero line, watch out. That could be nothing more than a recharge point to see the markets going up higher. Now, one thing to note, if we can get below value area low, then I am going to want to go ahead and target the low from Friday, and then down here towards gap support at 468.43. Anything below that, I'm going to be holding to see, can we go ahead and get the gap filled to the downside? Now, when we come over and look at the weekly volume profiles, you can notice we did close above the weekly value area high, which comes in at 19,423.50. The point of control will be 19,078.50, and value area low is going to come in at 18,523.50. So you guys know the routine. If we start getting below value area high, then I am going to want to target that point of control, which will be an untested point of control. But we also want to be mindful of this minus development area, anywhere from about 19,306 down to about 19,213. I know it's a pretty large range. We come over and look at the daily profiles. Notice value area high comes in at 19,642.50. The point of control will be 19,604.00. Value area low will come in at 19,525.50. Now, if we start breaking below value area low, I want to be on the sell side of the market. I want to look for a retest of 19,403. Anything below that level, I'm looking for that minus development area that we talked about on the weekly profiles, along with the point of control in this top of this zone right here at about 19,224, which is also within that minus development area that we talked about. However, if we start breaking above value area high, then I do want to look for a retest of the highs from the overnight session on Friday, somewhere in the ballpark of 19,682. Then anything above that price point, then I would want to turn my focus towards this untested point of control. Also comes into a high volume area on the composite profile. That level is 19,962.50. If you want to learn how to avoid your stop losses from being hunted, watch this video right here.